Welcome back to the Pro Ticker Podcast, everyone, your Friday morning edition covering major financial magazine headlines.
Ready to dive in? We got a ton of interesting stuff to cover today, from retail to China.
Yeah, let's jump right into it. The Wall Street Journal has this article about the big guys in retail getting even bigger. Walmart, Amazon, and Costco. I mean, they're not just surviving, they're taking over.
It's pretty wild what they're doing. The journal says those three now make up like 17% of all U.S. retail sales.
Wow.
And even crazier, they account for 57% of the growth in retail sales these past few quarters.
So basically, for every new dollar spent in retail, over half of it goes to one of those three.
You got it.
That doesn't leave much room for anyone else, it seems like.
Nope. The smaller guys are definitely feeling the squeeze.
Hmm.
The journal talks about supermarkets. They're kind of stuck between a rock and a hard place, losing customers to warehouse clubs like Costco on one side.
Yeah, those bulk buys are tempting.
And then on the other side, you have the supercenters like Walmart, undercutting them on price.
I've noticed that even dollar stores are stepping up their game trying to compete.
Oh yeah, even Dollar General's getting in on the same-day delivery game now, trying to catch up with Walmart.
It's almost like David and Goliath, but Goliath keeps getting bigger and bigger.
Haha, exactly. And the journal goes into why these retail giants are so unstoppable. One thing is their massive spending. They can pour billions into stuff like faster delivery and logistics.
Which in the end means lower prices for us.
Right. And then there's the membership programs they've got us all hooked on.
I feel like everyone I know has at least one of those memberships.
The loyalty is insane. Evercore did a survey and found that over 90% of Amazon, Costco, and Walmart members said they'd probably renew.
That's a lot of people paying those yearly fees.
Definitely gives them a huge edge. So this begs the question, what's the future of retail gonna look like?
Can the little guys even survive?
It's gonna be tough, but maybe they can find their niche, by specializing in specific products or offering amazing customer service or really becoming a part of their local communities.
Basically offering something the giants can't.
Exactly. Now let's shift gears and talk about China. Bloomberg has a report on how their currency, the yuan, has weakened past this critical level 7.3 per dollar.
I remember reading about that. That's a level China had been working hard to defend. So this move is making people wonder what's going on.
Right. It could be a strategic move on their part. A weaker yuan makes their stuff cheaper for other countries to buy.
So they're trying to boost their exports.
Exactly. With all the worries about their economies slowing down, this might be a way to give their manufacturing a shot in the arm.
But Bloomberg also mentioned that this move isn't without risks, right?
Yeah, they brought up what happened back in 2015 when they devalued the yuan, which led to a ton of money flowing out of the country.
So that happens again, it could cause some instability.
For sure. And some analysts quoted in the Bloomberg article think the yuan might weaken even further, maybe reaching 7.45 or even 7.6 by the middle of 2025.
Whoa, that could have a big impact globally, especially for those emerging markets already dealing with weak currencies.
It's all connected. China's economy sneezes, the world catches a cold.
Okay, let's talk about something that tends to shine when there's uncertainty gold. CNBC has an article about how it's been doing lately.
Unsurprisingly, it's on the rise, hit its highest point since mid-December.
Makes sense with all the stuff we've been talking about.
Yeah, the weaker dollar, the geopolitical stuff going on around the world, it's all contributing to gold's appeal as a safe haven.
CNBC also mentioned President Trump's upcoming inauguration and the speculation around his policies.
Right, there's a lot of talk about whether his policies will lead to inflation, especially with his stance on tariffs.
If you add that to the yuan weakening and the overall global uncertainty, it's no wonder people are turning to gold.
It's the classic flight to safety. Now, this MarketWatch article caught my eye. It talks about how the U.S. economy has been pretty resilient despite the Fed raising interest rates these past couple of years.
Yeah, I've been surprised by that too. You'd think those rate hikes would have slowed things down more.
MarketWatch says part of the reason is that consumers and businesses locked in low rates before the hikes started.
So they had a cushion to absorb the impact.
Exactly. And get this, corporate net interest payments are near record lows.
That's not what you'd expect with rates going up.
Right. It suggests companies were being smart and taking advantage of the low rates while they lasted. Now that the Fed's cutting rates again, MarketWatch says that's going to boost asset prices even more and encourage spending.
So it seems like we might be seeing a delayed reaction to those rate hikes.
Yeah, the full effects might not be felt for a while, which makes things tricky for the Fed.
Speaking of tricky, let's talk about Tesla MarketWatch. Also has a piece on how their sales figures missed estimates for the first time ever.
Yeah, that's a big deal. Their stock took a 6% hit on the news, extending a losing streak and dropping below $400 for the first time in weeks.
Ouch. Some analysts are saying it's just a blip, but others are wondering if Tesla can actually hit those ambitious growth targets for 2025.
Those targets depend heavily on their full self-driving tech and their robo-taxi plans, which are still pretty uncertain.
It's definitely a test for Tesla.
No doubt. Now let's move on to some controversies making headlines. CNAC reports that President Biden is gearing up to block U.S. Steel's acquisition by Nippon Steel.
That's a huge deal, wasn't it? Like a $14 billion acquisition?
Yep, $14.1 billion to be exact, and it's been facing political pushback from the get-go.
MarketWatch mentioned concerns from Pennsylvania senators and even incoming Vice President J.D. Vance.
Right. And it looks like those concerns have won out. They're expecting a formal rejection any day now.
U.S. Steel's stock price has taken a hit, too. MarketWatch says it dropped from $55 per share when the deal was announced to around $29 in pre-market trading.
That's a big drop. Shows how uncertain things are for U.S. Steel.
Both CNBC and MarketWatch talked about their struggles with weak pricing and demand and the costs associated with their new facility in Arkansas.
It's going to be interesting to see how they navigate this.
Definitely. Now, from steel to used cars, CNBC also has the story on how short-selling firm Hindenburg Research is targeting Carvana.
They're accusing Carvana of some shady stuff like accounting manipulation and questionable loan practices.
Hindenburg didn't hold back in their report, calling Carvana's recent turnaround a mirage built on shaky financials.
Strong words.
CNBC highlighted how the report focuses on Carvana's loan sales and the business dealings between the CEO and his father, who's also the biggest shareholder.
Sounds like a potential conflict of interest.
Right, Carvana denies everything. But CNBC mentioned that this isn't the first time the family's control of the company has been questioned. There have even been lawsuits alleging a pump-and-dump scheme.
It's a messy situation.
Definitely one to watch closely.
For sure. Now let's check out what's going on in the housing market. CNBC has this article about how we're seeing more homes for sale, but they're not selling.
So, more supply, but not more demand.
Exactly. It's kind of a weird trend. Redfin says active listings in November were up over 12% compared to last year, and they reached their highest level since 2020. But over half of those homes have been sitting on the market for at least 2 months with no takers. CNBC is calling it stale supply.
Seems like sellers and buyers aren't on the same page about prices, especially with mortgage rates still above 7% and home prices still climbing.
That's a big part of it. Redfin agents said that if a home is priced right and in good condition, it'll still sell quickly.
So there's still demand, just not for everything?
Exactly. Buyers are being more picky these days.
So maybe the power is shifting from sellers to buyers.
It's looking that way. We're moving away from that crazy seller's market we had a few years ago to something more balanced.
Okay, before we move on, let's quickly touch on this piece from the Wall Street Journal about the SEC having trouble collecting fines.
Apparently, they've written off almost $10 billion in penalties over the past decade.
$10 billion? That's insane. Makes you wonder how effective their enforcement really is.
The Journal mentioned this guy, Paul Bilzerian. He is a former corporate raider who's managed to dodge the SEC for over 30 years. Yeah, he owes them like $180 million with interest, but he keeps playing games with them, claiming he's broke, declaring bankruptcy, even moving to a different country to avoid paying.
Wow, that's some next-level evasion.
It makes you wonder if those big fines the SEC announces actually scare anyone, if people think they can just get away with not paying.
Maybe they need to rethink their strategy.
Definitely. All right, let's talk about stock buybacks. Bloomberg says Wall Street's predicting a big year for them in 2025.
Buybacks. Those are when companies repurchase their own stock, right?
Yep. It's often seen as a good sign, like the company's confident about its future.
And it can boost their earnings per share.
Exactly. But they can be controversial, too. Some people argue that companies should be using that money for other things.
Like investing in their business or their employees.
Exactly. Bloomberg says buyback announcements are already off to a strong start this year.
So companies seem pretty optimistic about 2025.
Yeah, despite all the uncertainty we've talked about, it's definitely a trend to keep an eye on.
Now, Bloomberg also has this piece about the Magnificent Seven tech giants maybe hitting some bumps in the road this year.
Those are the big names: Apple, Microsoft, Amazon, that whole crew. They were the market darlings for so long.
Yeah, they drove a huge chunk of the S&P 500's gains last year.
But things might be slowing down for them. Morgan Stanley's chief investment officer is quoted in the article saying he's a bit cautious.
Why is that?
Basically, their earnings growth might not be as strong as it has been.
Makes sense. They had a phenomenal year last year.
Right. Analysts are predicting a combined earnings increase of just 18% this year compared to 34% in 2024.
That's a pretty big drop.
Yeah, and Bloomberg mentioned that the Magnificent Seven index is on track for its longest losing streak since 2022.
So maybe investors are starting to have second thoughts.
It could be that the market's realizing that even these tech giants aren't invincible.
So if they're not the sure bet they used to be, where should investors be looking?
Bloomberg's advice is to be more selective, look beyond the big names, and diversify your portfolio.
Sound advice. Okay, let's talk about oil. CNBC has an article on how prices are continuing to rise.
Yeah, it's being driven by optimism about government policies to stimulate economic growth.
So the thinking is that if the economy grows, demand for oil will go up.
Right. CNBC points out that factory activity around the world wasn't so great at the end of 2024.
So there's hope that governments will step in to boost things.
Exactly. Now, on the supply side, things are a bit mixed. CNBC says that U.S. gasoline and distillate inventories actually jumped last week.
Refineries ramping up production.
Yep. But fuel demand hit a 2-year low, which could offset some of that increase.
And then there's always the wild card of weather.
Oh, yeah. CNBC mentioned how some forecasts are predicting a cold snap in the U.S. and Europe.
Could drive up demand for diesel as a heating fuel alternative to natural gas.
It's crazy how much the weather can still impact commodity prices.
Speaking of global markets, Bloomberg has this interesting piece on how China's bond market is becoming more and more popular.
Yeah, Chinese bonds have had their best returns in a decade, and analysts think there's more to come.
Why the sudden interest?
A few reasons, actually. China's central bank's been easing monetary policy to stimulate their economy.
Which means lower interest rates.
Right. And that makes Chinese bonds more appealing compared to other fixed income investments.
Bloomberg also said there's a growing sense that China's economy is stabilizing, which is boosting confidence in their bond market.
It's an interesting development, especially with all the concerns we talked about earlier about China's economic slowdown.
So investors are weighing the risks and the potential rewards.
Exactly. Now, for a fun little finance story, Bloomberg has an article about a potential shortage of ticker symbols.
Ticker symbols, you mean those letter combinations that represent companies on the stock market?
Yep. With so many companies going public, especially in tech, we're running out of 4-letter ticker symbols.
Seriously.
Yep. Bloomberg says some exchanges are already trying out 5-letter tickers or even using letters and numbers together.
It's kind of funny to think about something as basic as ticker symbols becoming a scarce resource.
It shows you just how dynamic and innovative the financial markets are.
Now let's circle back to the U.S. economy. Bloomberg has this piece that delves into bank reserves.
Those are the funds that banks keep at the Fed, right?
Yeah, they're important for the Fed to manage the economy and keep the financial system running smoothly.
Right. And those reserves have dropped quite a bit. Bloomberg says they're below $3 trillion for the first time since 2020.
Why is that?
Part of it is the Fed's been doing this thing called quantitative tightening, where they're basically shrinking their balance sheet and taking liquidity out of the system.
Just trying to slow things down.
Exactly. And Bloomberg also mentioned that banks tend to reduce certain activities on their balance sheets at the end of the year for regulatory reasons.
Makes sense.
So it's a combination of factors, but some analysts are worried that if reserves drop too much, it could create problems.
Like what?
Like a liquidity shortage, which could disrupt financial markets.
So the Fed have to walk a tightrope here.
Absolutely. Now let's switch gears and talk about ESG investing, environmental, social, and governance investing.
I've been hearing a lot about that lately. Seems like investors are really starting to care about more than just profits.
Yeah, it's definitely becoming mainstream. Bloomberg has an article about how this is playing out in the world of exchange-traded funds, or ETFs.
Those are like baskets of securities that trade on an exchange, right?
Exactly. They've
Yeah.
gotten really popular because they're relatively cheap and offer diversification.
So now there are ESG-focused ETFs?
Yep. They track indexes that screen companies based on their ESG performance.
So investors can put their money where their values are.
Exactly. It's really cool to see how the availability of ESG data is helping people make more informed choices.
Definitely seems like this trend is here to stay.
Now, speaking of ESG, Bloomberg also has this piece about a new rule that's causing some controversy. It would require U.S.-listed companies to disclose their greenhouse gas emissions.
So more transparency about their environmental impact.
Right. The idea is to make companies more accountable for their carbon footprint. But Bloomberg says some industry groups aren't happy about it. Why not? They're saying it's too much of a burden and could be really expensive to comply with.
And they're worried about lawsuits and bad PR if their emissions aren't well received.
It's a battle between transparency and business concerns.
Definitely. A tricky situation.
For sure. Now let's check in on the labor market. Bloomberg has an article about how employers are still struggling to find workers.
Even with the economy slowing down.
Yep. It's kind of weird. You'd think there'd be more people looking for work.
Right.
But it seems like there's a mismatch between the skills employers need and the skills people have.
Bloomberg mentioned a few things contributing to this, like the aging population and the decline in immigration.
And childcare costs and availability play a role, too.
It's a complex issue with no easy fixes.
Definitely. Employers are going to have to get creative to attract and keep good people.
Speaking of challenges, Bloomberg also has an article about how private equity firms are having a harder time raising money.
Those are the firms that pool money from big investors to buy and invest in private companies, right?
Right.
But with interest rates going up and the economy being uncertain, those investors are being more cautious.
Makes sense.
So it's taking longer for these firms to raise money, and the valuations of private companies might go down.
Okay, now for something a bit more positive, Bloomberg has an article about how AI is revolutionizing drug discovery.
It's amazing how AI is being used to analyze huge amounts of data, identify potential drug targets, and even design new molecules.
Sounds like it could speed up the process of developing new drugs and make them cheaper.
Exactly. And it could lead to more personalized and effective treatments.
It's really exciting to see how AI is being used to improve healthcare.
Now let's talk about Bitcoin. It's been making a comeback, according to Bloomberg.
After a bit of a quiet period, it seems like it's regaining popularity.
Yeah, it's had its ups and downs, but people still see it as a potential store of value and a way to hedge against traditional financial systems.
Bloomberg mentioned a few things driving this resurgence, like more institutional adoption, renewed interest from retail investors, and worries about inflation.
Right. And they also said that the potential for clearer regulations in the U.S. could make Bitcoin more appealing.
It's definitely a volatile asset, but it's clear that it's not going away anytime soon.
Now, for a more serious topic, Bloomberg has an article about rising sea levels and the threat they pose to coastal cities.
Climate change is a real issue, and this is one of the most concerning consequences.
Absolutely. Bloomberg highlighted the risks of increased flooding, erosion, and damage to infrastructure.
Lots of major cities are right on the coast.
Exactly. They're particularly vulnerable. The article emphasized the need to take action now, like building seawalls, relocating important infrastructure, and implementing sustainable urban planning.
It's a reminder that climate change is already having a real impact.
Definitely. Now let's talk about something that's generating a lot of buzz, the metaverse.
Ah, yes, the metaverse, the virtual world that everyone's talking about.
Exactly. It's basically a shared virtual space where people can interact, work, play, even shop.
It's still early days, but lots of tech companies are pouring money into it.
They're betting it's the next big thing. Bloomberg's article explored how the metaverse could impact different industries like retail, entertainment, even education.
It's mind-boggling to think about all the possibilities.
For sure. It could change how we do just about everything.
Now let's talk about something a bit more grounded. The conflict in Ukraine and its impact on the global food supply.
It's a tragic situation, and it's having ripple effects around the world. Ukraine is a major exporter of wheat and other grains.
So the disruption to their agriculture is causing shortages and price increases in many countries.
Bloomberg stressed the need for international cooperation to address this crisis.
It's a reminder that even something as basic as food can be affected by global events.
Absolutely. Now let's move on to a more positive development. The transition to renewable energy is gaining momentum.
That's great news.
Bloomberg reported that investments in solar, wind, and other renewable technologies are soaring.
It's about time.
Lots of countries are setting ambitious goals to reduce their reliance on fossil fuels.
It's a long-term effort, but it's encouraging to see the global commitment to a more sustainable future.
Definitely. But even with this positive trend, inflation is still a big concern.
It's been eating away at our purchasing power for a while now.
Bloomberg explored the factors behind it: supply chain problems, rising energy prices, strong consumer demand. It's a complex issue.
And central banks are trying to find that sweet spot between controlling inflation and avoiding a recession.
It's a tough balancing act for sure.
Okay, let's take a quick look at the esports industry. Bloomberg has a piece on how its growing popularity is creating all sorts of new opportunities.
Esports competitive video gaming, it's huge now.
Yeah, I've been hearing more and more about it.
It's attracting millions of fans and investments from traditional sports leagues, venture capitalists, even celebrities.
It's become this massive industry blurring the lines between the physical and digital worlds.
It's fascinating to see how entertainment is evolving.
Now, before we move on, let's touch on social media and its role in society.
It's become such a huge part of our lives.
It's how we connect with people, share information, stay up to date on what's happening.
But Bloomberg also highlighted the growing concerns about the spread of misinformation, online harassment, and even addiction.
It's a powerful tool that can be used for both good and bad.
Absolutely. Finding the right balance between Free speech and protecting people from harm is an ongoing challenge.
It's a tough issue with no easy answers.
Definitely. Now, for a more positive note, Bloomberg has an article about how technology is improving healthcare.
I'm always fascinated by the advancements in that field.
They talked about telemedicine, remote patient monitoring, and AI-powered diagnostics.
It's amazing how technology is making healthcare more accessible, efficient, and personalized.
It's a really exciting area with so much potential.
Now, Bloomberg has another article about private equity firms facing a tougher fundraising environment.
These firms are finding it harder to raise money from big investors like pension funds and endowments because of rising interest rates and economic uncertainty.
It's making it more challenging for them to invest in private companies.
This situation is creating longer fundraising cycles and potentially lower valuations for private companies.
It's a sign of the times and the headwinds facing the financial markets.
It's a reminder that even industries that have experienced rapid growth are not immune to broader economic trends.
Okay, let's talk about something that's generating a lot of buzz: the metaverse.
The metaverse is a persistent, shared 3D virtual world accessed through the internet. It's still in its early stages, but many tech companies believe it will be the next big computing platform.
Bloomberg explores the potential implications of the metaverse for various industries, from retail and entertainment to education. It seems like it could revolutionize everything.
It's a fascinating and rapidly evolving space, definitely worth paying attention to.
Now let's turn to the conflict in Ukraine and its impact on global food supply.
Ukraine, a major exporter of wheat and other grains, is seeing its agricultural sector disrupted, leading to food shortages and price increases globally.
Bloomberg emphasizes the need for international cooperation to address this crisis and ensure food security for vulnerable populations.
This is a stark reminder that geopolitical events can have major consequences on something as fundamental as food.
Now for some good news. The transition to renewable energy sources is gaining momentum.
Investments in solar, wind, and other renewable technologies are surging, with countries setting ambitious targets to reduce their reliance on fossil fuels.
It's encouraging to see this global push towards a more sustainable future.
It's a long-term transition, but the commitment is there.
However, inflation continues to be a concern, impacting purchasing power and household budgets.
Bloomberg explores the factors driving inflation, including supply chain disruptions, rising energy prices, and strong consumer demand. Central banks are grappling with this complex issue.
They're walking a tightrope, trying to control inflation without triggering a recession.
It's a delicate balancing act.
Okay, let's take a quick look at the esports industry.
Esports, or competitive video gaming, has exploded in popularity, attracting millions of fans and investments from traditional sports leagues, venture capitalists, and celebrities.
Bloomberg highlights the growth of this industry and the new opportunities it's creating.
It's fascinating to see how entertainment is evolving and the blurring of lines between the physical and digital worlds.
Now, before we move on, let's talk about social media's role in society.
Social media has become an integral part of our lives, connecting people worldwide, but there are growing concerns about the spread of misinformation, online harassment, and addiction.
Bloomberg explores this double-edged sword.
Finding the right balance between promoting free speech and protecting users from harm is a constant challenge.
Now for some positive news. Technology is improving healthcare outcomes.
Bloomberg reports on the advancements in telemedicine, remote patient monitoring, and AI-powered diagnostics.
These innovations are transforming the healthcare industry, making it more accessible, efficient, and personalized.
It's exciting to see how technology can be harnessed to improve human health and well-being.
Now, Bloomberg has another article about private equity firms facing a tough fundraising environment.
High interest rates and economic uncertainty are making large investors like pension funds more cautious, leading to longer fundraising cycles and possibly lower valuations for private companies.
It's a sign of the times, impacting even industries that have seen significant growth in recent years.
It's a reminder that even successful businesses aren't immune to economic shifts.
Now let's turn to the metaverse, a concept that's generating a lot of buzz.
The metaverse, a persistent, shared 3D virtual world accessed through the internet, is still in its early stages.
Bloomberg explores its potential implications for various industries, from retail and entertainment to education.
Tech companies are betting big on the metaverse, believing it to be the next big computing platform.
It's a concept full of possibilities, potentially revolutionizing the way we interact with the digital world.
Now, let's shift to the ongoing conflict in Ukraine and its impact on the global food supply.
The disruption of Ukraine's agricultural sector, a major exporter of wheat and other grains, is causing food shortages and price increases.
Bloomberg stresses the need for international cooperation to address this crisis.
This situation highlights the interconnectedness of the global food system and the consequences of geopolitical events.
Now let's turn to a more positive note, the acceleration of the transition to renewable energy sources.
Investments in solar, wind, and other renewable technologies are surging, driven by concerns about climate change and the need for energy security.
It's encouraging to see this global commitment to a more sustainable future.
However, inflation remains a significant concern, impacting purchasing power.
Bloomberg delves into the drivers of inflation, including supply chain disruptions, high energy prices, and strong consumer demand.
Central banks are trying to balance controlling inflation with supporting economic growth.
It's a complex challenge with no easy solutions.
Now let's glance at the esports industry.
The rising popularity of esports is attracting millions of fans and investment from various sectors.
Bloomberg highlights the blurring of lines between the physical and digital worlds and the opportunities created by esports.
It's an exciting time for the gaming industry.
Now let's discuss social media and its impact on society.
Social media connects people globally, but also raises concerns about misinformation, online harassment, and addiction.
Bloomberg explores these challenges and the ongoing debate on regulating these platforms while protecting free speech.
Finding the right balance is crucial.
Now, for some positive news. Technology is transforming healthcare.
Advancements in telemedicine, remote monitoring, and AI-powered diagnostics are making healthcare more accessible, efficient, and personalized.
It's exciting to see how technology can improve health outcomes.
It's a field with immense potential.
Now, Bloomberg reports on the tough fundraising environment facing private equity firms.
Rising interest rates and economic uncertainty are making large investors more cautious, impacting these firms' ability to invest in private companies.
This situation underscores the interconnectedness of the financial markets and the impact of broader economic trends.
It's a reminder that even successful sectors can be affected by external factors.
Now, let's turn our attention to the metaverse.
The metaverse, a persistent shared 3D virtual world accessed through the internet, is in its early stages but generating a lot of interest.
Bloomberg examines its potential implications for various sectors.
Tech companies believe it will be the next big computing platform, potentially revolutionizing how we interact online.
It's a concept full of possibilities, and its evolution will be fascinating to observe.
Let's shift to the ongoing conflict in Ukraine and its impact on the global food supply.
The disruption to Ukraine's agricultural sector, a major exporter of wheat and other grains, is contributing to food shortages and rising prices.
This situation highlights the fragility of the global food system and the need for international cooperation.
Now let's turn to a positive development. The transition to renewable energy is gaining momentum.
Investments in solar, wind, and other renewables are rising as countries strive to reduce their reliance on fossil fuels.
It's a positive step toward a more sustainable future.
However, inflation continues to be a concern, eroding purchasing power.
Bloomberg analyzes the factors driving inflation, including supply chain issues, high energy prices, and strong consumer demand.
It's a complex problem that central banks are trying to address.
Okay, let's take a quick look at the esports industry.
Esports, or competitive video gaming, have exploded in popularity, drawing in millions of fans and investments from various sectors.
Bloomberg highlights the opportunities created by this growing industry.
It's an exciting time for the gaming world.
Now let's touch on social media and its impact on society.
Social media connects people globally, but also raises concerns about the spread of misinformation and online harassment.
Bloomberg explores these challenges and the ongoing debate on how to regulate these platforms.
Balancing free speech with protecting users is crucial.
Now, for some positive news. Technology is transforming healthcare.
Advancements in telemedicine, remote monitoring, and AI-powered diagnostics are making healthcare more accessible, efficient, and personalized.
Bloomberg showcases the potential of technology to improve health outcomes.
Now, let's turn our attention to the challenges faced by private equity firms.
Rising interest rates and economic uncertainty are making it harder for these firms to raise capital, impacting their investments in private companies.
This situation highlights the interconnectedness of the financial markets and the impact of economic conditions on various sectors.
It's a reminder that even thriving industries can be affected by external factors.
Now let's shift our focus to the metaverse.
The metaverse, a persistent, shared 3D virtual world accessed via the internet, is in its early stages but generating significant buzz.
Bloomberg explores its potential to revolutionize how we interact online, with tech companies investing heavily in its development.
It's a concept full of possibilities, and its evolution will be fascinating to watch.
Now let's turn to the ongoing conflict in Ukraine and its global impact.
The disruption of Ukraine's agricultural sector is contributing to food shortages and price increases worldwide.
Bloomberg emphasizes the importance of international cooperation to address this crisis.
Now, for some positive news. The transition to renewable energy is accelerating.
Investments in solar, wind, and other renewable technologies are increasing as the world seeks to move away from fossil fuels.
It's a positive step toward a more sustainable future.
But inflation remains a persistent challenge, eroding purchasing power.
Bloomberg examines the factors driving inflation, including supply chain disruptions and high energy prices.
Now let's take a quick look at the esports industry.
Esports is booming, attracting millions of fans and investment from various sectors.
This growth highlights the evolution of entertainment and the increasing popularity of video gaming.
Now let's turn to social media and its role in society.
While connecting people globally, social media also raises concerns about misinformation and online harassment.
Bloomberg explores these challenges and the debate surrounding regulation.
Balancing free speech with user protection is crucial.
Now, for some positive news. Technology is transforming healthcare.
Advancements like telemedicine and AI-powered diagnostics are making healthcare more accessible and efficient.
These innovations are improving health outcomes and shaping the future of medicine.
Now let's look at the challenges facing private equity firms.
Rising interest rates and economic uncertainty are impacting their ability to raise capital.
This situation underscores the influence of broader economic conditions on various sectors.
It's a reminder that even thriving industries can be affected by external factors.
Now let's explore the metaverse.
The metaverse, a persistent shared 3D virtual world, is generating a lot of buzz.
Bloomberg discusses its potential to revolutionize online interaction, with tech companies investing heavily in its development.
It's a concept with vast possibilities, and its evolution will be exciting to follow.
Let's shift gears and talk about the conflict in Ukraine and its global impact.
The disruption to Ukraine's agricultural sector is contributing to food shortages and rising prices worldwide.
Bloomberg emphasizes the need for international cooperation to address this crisis and ensure food security.
It's a reminder of the fragility of global systems and the importance of collaboration.
Now, for a positive note, the transition to renewable energy is accelerating.
Investments in solar, wind, and other renewable technologies are increasing as the world seeks alternatives to fossil fuels.
It's a positive trend towards a more sustainable future. And on that note, about the future, we'll see you all tomorrow morning with new headlines from major financial magazines. And speaking of the future of work, Bloomberg has this article about how it's changing so fast.
Yeah, it feels like every day there's a new article about robots taking over or something.
Now, maybe not quite that dramatic, but the way we work is definitely being reshaped by technology, globalization, all these big forces.
It's exciting and a little scary at the same time, you know?
I get it. Bloomberg talks about automation, remote work, the gig economy, all these things that are changing the game.
Yeah, and for both workers and employers.
Exactly. Companies are having to adapt. They're trying out flexible work arrangements, investing in training their employees, and focusing on creating a more inclusive and purpose-driven work environment.
It's a whole new world out there. Now, this is an interesting one. Bloomberg has a piece on the possibility of a second Donald Trump presidency and what it could mean for the markets.
That's definitely something investors are keeping a close eye on. Trump's policies, especially on trade, could have a huge impact.
Especially his America First approach.
Right. That could lead to more protectionist policies and potentially shake up existing trade agreements.
Bloomberg mentioned that some analysts are worried about a possible trade war with China.
Yeah, that could have serious consequences for the global economy.
It's a big unknown that investors have to factor in.
Absolutely. The election outcome and the policies of the new administration will have a big influence on the markets.
Well, we've covered a lot of ground today. Everything from the rise of the retail giants to the possibility of a U.S.-China trade war. It's a lot to digest.
It's a crazy world out there, but hey, that's what makes it so interesting, right?
Definitely. And to our listeners, thanks for joining us for another deep dive into the world of finance. Remember, things are always changing, so stay informed, stay curious, and we'll see you back here tomorrow morning with more headlines from the financial world.